The December 2023 numbers are in for the Huntsville, Athens, and Morgan County market. So we're gonna jump through all of those different markets and look at the overall market as well. But before we jump into that, make sure you hit subscribe below to stay on top of all the latest Huntsville, Alabama real estate news. For the Huntsville market, the average sales price continues to go up even with the rapid rate of increase that we've had over the last couple of years, and we continue to keep up with inflation. The average sales price is up $16,000. It was $366,000 this time last year. Now we're up to $382,000 as our average sales price in Huntsville. The number of homes sold did drop, however, in December of 2023 versus 2022, a 2.6% drop, 538 homes sold last year versus 524 homes sold this year. Overall, that's actually a good sign that it was only a 2.6% drop, because overall for 2023, we had a big drop in terms of the volume of homes sold. It's good to see that that is starting to increase a little bit over the previous year. It's not quite as big a drop. Everything is starting to trend in the right direction in terms of home sales for 2024. We also had an increase in terms of the number of homes on the market, a 19% increase, as a lot of people that have had and experienced that mortgage rate lockdown effect are starting to put their homes on the market as interest rates are starting to drop, and they're just wanting to move on with their lives and their plans and their dreams and putting their homes for sale on the market. So jumping into the Athens market, the average sales price is down year over year, $11,000, but from $358,000 to $347,000 in 2023 of December. And I think a lot of that just has to do with the inventory that was available on the market. I don't think that's a sign of prices really declining in the Athens market. It's also healthy that the average sales price is a little bit below Huntsville. They were neck and neck for the last several months. I do think there needs to be a little bit of a separation to have more affordability for folks that are willing to make that commute into the Huntsville market. Athens market is a great market for that, with high quality homes, high quality living, and really great school districts as well. There are more homes available on the market in this area as well. The big thing is a huge increase, really a 38.5% increase of available homes in this market, which is a good sign because there needs to be additional inventory, especially in the outlying areas. There were also more homes sold in the Athens market, 143 versus 166, which is a 16% gain, as this is a growing and thriving area for the greater North Alabama area. For Morgan County, there was a huge drop in terms of average sales price. Average sales price was $301. Now it's down to $269,000. So that covers the Decatur, Hartsville, Priceville type areas. There were 39.7% more homes sold, 102 versus 73, and a huge increase in the overall homes on the market, 38.8% increase, as we're starting to see more new construction over those areas as well. I think one of the biggest drivers of the price coming down is just a lot of the listings that we're seeing in the Decatur market are sitting north of $200,000. So $225,000, $250,000 listings are sitting and not selling as fast as the homes below $200,000. Those homes are really kind of flying off the shelves in Morgan County. And so that is starting to drive down the overall average sales price, because there are more homes selling in the lower price points out in that area. So overall, for all the counties that are reporting in the North Alabama area, new listings are up 21.8%, which is a great sign. We were 725 this time last year. We're now at 883 homes that went on the market in December 2023. And the reason that's such a great sign is that there's just simply not been enough inventory for all these potential buyers that are going to be coming off of the sidelines. Not enough inventory to choose from. And it's really a blessing, because there's been a 6 million home deficit in this country. And so we've needed more inventory. But one of the things that's been keeping people on the sidelines has been that mortgage rate lockdown effect, where a lot of homeowners have interest rates in the high 2s or low 3s, and they simply haven't been motivated enough to sell their home to move to the next home with that lower interest rate. But as interest rates are starting to fall, we're starting to see that loosen up with that increase in inventory. With that, we also have pending sales up 670 this time last year. Now we're up to 748, which is a 11.6% increase, which is a trend in the right direction, as we had some of the lowest sales in a couple decades in 2023. So the overall number of homes sold was really low in 2023. However, it's starting to increase. Closed sales was down slightly, 3.9%. 887 versus 923 the year before, which is really closed sales is going to be your November and your October contracts, which makes sense. October, November in general were a little bit slower for the overall area. However, we're starting to trend back up as interest rates are starting to come down. Days on market increased from 22 to 41 days, which is not a bad thing. That's still a very healthy market. It's probably not quite as high as you'd like to see in a normal market. So days on market has increased. The average sales price is still up year over year, 4.8%. So keeping up with inflation, $329,135 this time last year. Now we're up over 344, 929. The percent of list price is also slightly up from 97.8% from 97.7% the year before. So kind of stayed a little bit flat. Really what you like to see is around 97% for a balanced market, much healthier than what we were at, where we're seeing multiple offers and all the homes going above list price, where they were north of 100% on that percent of list to price sales ratio. So probably the biggest headline is housing affordability. Just a quick reminder, a housing affordability index of 100 means the median household income can afford the median price range home. Fortunately, we have fallen south of that below 100, which means a lot of our police officers and teachers and nurses are having a hard time finding houses that are affordable for them within close proximity of where they're working, the school that they work at or the hospital that they work at, etc. And so that's been a negative thing for our overall area. We were at 80 the previous month. Now we are up to 90. So we jumped from 80 to 90 with the lower interest rates. So that is a huge positive sign for the North Alabama area. Supply is also up as we've had more listings come available on the marketplace. We're up from 2.6 months to 3.2 months supply overall. Basically what that means is based on the current rate of sales, all the available homes that are on the market right now, if no new homes came available on the market, how long would it take to sell all that inventory? So we are up to 3.2 months worth of supply. We're still south of what you consider a normal or kind of a balanced market, which is 4 to 6 months worth of supply. So technically we're sitting at a seller's market. But the interesting thing is you look across the MLS, there's a lot of price drops, which is not typically what you see in a seller's market. So it's a very weird seller's market where we don't have the normal supply where it is on the seller side. However, a lot of sellers are having to get really aggressive pricing on their homes because of all the new construction inventory and all the new construction incentives that have been offered. So existing homes have had to really focus on getting aggressive and competitive with the new construction that's out there. So overall, inventory is up 10.6%, so headed in that right direction. 2898 this time last year. Now we're up over 3,200 homes with 3,204 homes. In 2024, look for interest rates to continue to go down. As interest rates are starting to come down, expect to see more supply on the marketplace as people are willing to sell their homes from this mortgage rate lockdown effect. So look to see more available homes on the marketplace, more sales in 2024, housing affordability to also go up closer to that 100 level. However, what might start to drag that down a little bit as we get a lower interest rate, prices will likely begin to rise again in the north.